The market rewards the disciplined, not the impulsive. Hey traders, welcome back to Your Nifty Guy. Tomorrow is the weekly expiry, and that means volatility, opportunities, and traps all rolled into one. In today's video, I'll share my complete trade plan for tomorrow, key levels, option strategies, and how to avoid expiry day whipsaws. If you find value in my analysis, make sure to like the video, share it with your trading friend or trading communities, subscribe to the channel if you haven't already, and drop your thoughts in the comments. On that note, let's get started straight with the charts. And as usual, the video will be divided into two parts. First will be the analysis about what we did in the today's market, and then second will be shifting our focus towards planning the day for tomorrow. Before I start the video, tomorrow is the weekly expiry, and a word of caution, I am expecting a volatile expiry tomorrow because the last couple of days, as you guys know, were sideways, and so we can expect some volatility or maybe one unidirectional move tomorrow. That is something which we'll be seeing what the market throws at us. We'll simply be prepared for anything. That being said, anybody who is into option trading and is into option buying, my sincere request would be to shift your trading to the next week's expiry instead of tomorrow's options, which are expiring tomorrow. Even if you might have to pay a slightly higher premium, you will thank me later for the same. And on that note, we'll start with today's analysis. So, markets opened with a gap up on overall the overnight market news, and based on US markets, markets opened with a gap up, and immediately market came down to tried to fill the gap, but did not, and was completely sideways. Now, I took my first trade in the morning around these fib levels. I took it around this candle when this particular swing low was broken down around here. Briefly, the position went into profit, but then again, the SL was triggered. The SL was above this particular swing. It did not trigger around here, but in the options, the SL got triggered, and that was the reason I got out of the trade. Now, this was exactly our plan that this is the zero point 0.5 to 0.618 levels of the entire fall. And if we see any negative price action around here, we can take a short entry. And that is exactly what I did. And the trade was a flop and it took my stop loss. Now, the second trade plan that we had was that above this particular swing fib zone, we will be planning a long entry with a pullback. Now, we did get a closing right above it, followed by an inside bar. But then I was not too convinced to enter into this particular trade because this the most logical stop loss around here would have been around here. And in case if you are to take this particular big stop loss, you could have entered the trade around here. And as you can see, it would have been a profitable trade. After moving up, the market did come down to retest these levels and then again ultimately went up. But then I always speak about try to see where the market is coming from. So from the day's low, which was almost the day's low, the market had already moved around 82 points. Of course, the market can definitely be moving much more. It did eventually. But then for me, taking a 82 point stop loss did not make any sense. For me, 1 is to 1 trade or 1 is to 1.5 trade, which is the minimum that I want for in option buying, would not have made a much of an impact. And that was the reason I skipped this entry around here. But then once market gave this particular pullback and then turned around from here, this is where I had planned a long trade. And the stop loss was back around here. And I had planned the long trade. And I entered in an aggressive way. Or I always say that you should always let the markets commit to you before you commit to the market. But then there are certain times when you can take an aggressive bet based on your options pricing as well as the kind of sentiments that you are seeing. Say, for example, the market not being able to fill this gap, positive sentiment, markets taking a resistance from the zero point 0.5 to 0.618, failing immediately, and then ultimately giving us a closing above it. The sentiments were bullish. And why did I choose this particular 135 candle for the entry? Was that after market took a retest from here, there was a big ass doji which formed around here. If you can look at the 130 candle, this is a big ass doji which also retested the trend line. Now, had it continued down, it would have meant a breakout failure just like this day. Try to understand this is a parallel channel in which the prices have been moving since a long time. And on 12th of August, the prices went up, gave us closings, followed through, and then again immediately reversed. So, Had this doji given us a closing in not formed a doji, but had this been a negative candle and we would have closed around here, then that would have meant a breakout failure of the day's high, of the trend line, everything, and then we could have planned a short entry. But then as soon as the high of this doji was taken out, this is where I had entered. The most logical, or there's nothing right or wrong, but then as per the plan, the right entry would have been around here once this high was taken out. But only because trying, see, that is what I always try to tell you guys, is what talk to the market, try to see what is happening and why is that happening. Now, the markets, the sellers did put a pressure around here, but then they were fought back by the buyers, and it was a the closing was near the opening, much in fact, little bit higher than the opening. And it was a clear-cut doji. Now, a doji means indecisiveness, and prices moving high up above the doji after retesting the lower levels meant that the bulls were clearly in control. And this was the candle where I entered the trade. And again, for as per my trailing system, I got out around this candle one. Actually, I did not even wait for the candle closing. As soon as the low was being taken out, I exited. Again, I'll explain the logic in a very simple way. Now, this is what I call a series of sandwich candles. One, two, three, four. Now, there are these three particular candles starting from this inside bar of 205. All these three candles are within the body of the so this particular candle, which is the 2 o'clock candle. So there was a lot of sideways price action around here. Now, sideways price action usually means volatility contraction, which is the VCP, volatility contraction phase. After a volatility contraction phase, a volatility expansion phase comes. And once the expansion, if it would have broken up on the upside, of course, I am already in the trade and I would have carried on my position for much higher prices. But then as soon as I saw that this particular candle is breaking down below this particular low, I exited the trade that I had entered around here. Now that was in minor profits, just good enough to cover the loss which I had taken on this particular trade. So these were the only two trades that I had taken personally today in the market. So overall, again, a break-even day for me. Let's say markets are being tricky, which is something which I had expected. So like I spoke to you guys about, the same trend is being continued. On this day, we saw the markets on 7th of August, markets closing near day's high. Next day, the markets are closing near day's low. The very next day, markets are closing near day's high. The very next day, markets are closing near day's low. The very next day, markets are again closing near day's high. So this is nothing but a symbol of sideways price action, and that is exactly uh, what has been happening in the market. So that is not a surprise. But yes, of course, you have got to take your chances. You have got to play your cards. You have got to play your setup when they are forming. Now, if the market will reward you or will take away your stop loss is something that is completely dependent on the market. But then your duty, your job as a trader is to wait for your setups. And once they are formed, you need to take them, obviously, with proper risk management and with proper position sizing. So I hope the trades that I took were clear for you. I am also forward testing a passive trading strategy for option sellers. So this I used to do it long back. My entire portfolio of my long-term holdings, which are there, are pledged, and that gives me a good amount of margin. And I used to do that. And just last weekend, I believe I was speaking to one of the followers around on my channel, and he is into option selling. And that is when I was speaking to him. I was telling him about how option selling usually works with when you are playing a non-directional play, not a directional play. And out here in options buying, what I'm doing is I'm doing directional trading. So it was after that particular conversation with him, I again have tried to forward testing with small quantities by selling options in that account. So once I have concrete results about that particular strategy, I will be sharing it with you guys. So stay tuned for that. So that is a very low risk, but you need a very large amount of capital for that to make sense. Right. So that is again a intraday strategy. None of my trading strategies would involve carrying over the trades. Again, as of now, that is something which is there. Although I am trying to formulate or trying to uh, experiment with a strategy wherein I will enter into a positional option selling trade on Fridays and I will hold it up until Wednesdays or Thursday morning max to max. I'll not wait for the expiry because expiry volatility is something which can be crazy for option sellers. And right now, I'm not ready for that, especially because that account is linked to my long-term portfolio holding. So yeah, more on that later. Now we'll be planning for tomorrow. We don't need this. We don't need this. On a daily time frame, if we observe, today is again a doji and a inside bar. Why? Yeah. So this is a blacked out candle, which is a inside bar indicator. Again, we are inside yesterday's range completely, and this makes this particular high of 24,700 very, very important for us. So for tomorrow, the game plan will be very, very simple. We wait for this high. For our reference, I'm also marking out this high. These two highs are extremely close, but we can enter a trade around here and then we can continue. In case if we are back within this range, we can look for a short scalp on the downside based with a pullback based on price action again. So that would again mean that this particular setup, try to understand the market structure, right? So this would mean that this is the market structure, which is again changing into the bearish side, and that is something wherein we can plan for a trade on the short side, but then again, that will be a scalp for me. Of course, needless to say, above this particular high, we will be creating a long entry. We'll mark today's low. Below today's low, we will be planning for a short trade. Now, I have something which I had observed on a 75 minutes time frame, which I'm quickly sharing with you guys. So I always speak about market structure and how to look at the change in the market structure. So this is something which I observed. So mm, quickly drawing the market structure for you guys. So this is where we are standing. So out here, if you see, this is the 75 minutes time frame now. I This is the time frame which I started to use when I was into option selling. So once you are on the 75 minutes time frame, there are the equal number of candles throughout the day, right? From 9:15 to 3:30. If you divide it by 75, you get 1, 2, 3, 4, 5, 5 candles, I believe. Yes. 1, 2, 3, 4, 5 candles in a day. So I believe for a medium to higher time frame analysis, this is the candle which I time frame which I used for option selling. I'm currently again for the strategy that I'm deploying. I am using this. So if you look at the market structure, this was clearly into a lower high, lower low formation. Around here, market formed a double bottom. We breached up above this particular high, forming a higher high. And this low, which is yesterday's low, was the higher low, which is higher than the previous swing low, which has formed. Now, for the structure to confirm that it has changed, we already have a higher high, we have a higher low. If we go up above this, right, so we can clearly see that the structure has changed. And again, that is something which is just a piece of information for us. Ultimately, the price action is something that we will be paying close attention to and will be planning our trades based on that. But in case if we observe this is at the back of our mind, so this high, that is the reason I have marked this particular high as well, 24,700 odd levels, which are key importance to us. Above that, the structure again gets confirmed, and then we can will be in a buy on dips market in Nifty, and we can use our fib levels to plan out buy entries on the lower end, right, where we can get premiums at a very cheap rate. So I hope the plan of action is very simple and clear. My suggestion would be to keep the position light for tomorrow. In case if we see a trending market, we can definitely be playing it out. But then I expect the market to be volatile. And another key thing. There is a expiry trade that I often speak about only on the weekly expiries as well as the monthly expiries, and that is something which you can play out that is based on open interest. That is a very simple trade which we take on post 2 p.m. and it is only if that particular setup is forming will I be taking a trade in tomorrow's expiry, and that is post 2 p.m. And that's going to be a hero zero trade, right? Last expiry, it did work out very well. You can go out and check last week's expiry and as well as the maybe the June monthly expiry video where I have explained the setup in detail. So in case if that setup happens, that is the only trade which I'll be taking in tomorrow's expiry. All the rest of the trading throughout the day will be in the next month's expiry, next week's expiry, sorry. So I hope the trade plan is clear, and I wish you a good expiry trading tomorrow. And I will see you guys tomorrow post the market. This is your Nifty guy signing off for now. Cheers and have a good day. Thank you so much, guys, for tuning in.